I see things accelerating within the next few months, probably sooner than we expect. That means accelerating in the problems in the world, the debt increase or the growth of debt, the growth of inflation, and the price of gold and silver will be reflected by that, by what's happening in the world, of course. And I see still gold and silver going up substantially this year and over the next 10 years by multiples. And nothing is going to change that.
For a monetary asset with at least 5,000 years of history, it may seem ironic that gold has been capturing investors' attention as seldom before. The precious metal is coming off a multi-year run that included a 65% surge in 2025, its strongest annual gain since 1979, and a few days above $5,000 per ounce earlier this year. Even after the recent pullback, the price of gold is still up more than 100% since the start of 2024. Its cheaper precious metal cousin, silver, has vaulted an even more remarkable 190% in the same period. Renowned financial expert Egon von Greyerz emphasizes that long-term trends clearly point toward the end of the current monetary system, urging investors not to focus on short-term volatility in gold and silver. Egon explains that periodic corrections are normal within a broader uptrend, but the underlying drivers remain firmly intact. These pressures will accelerate in the coming years, with geopolitical events acting as catalysts rather than root causes. He also expresses concern over unsustainable debt levels, suggesting they resemble a structurally weak system that cannot be resolved without significant consequences. Furthermore, gold and silver should be viewed as long-term wealth protection rather than trading instruments. Egon believes that despite temporary declines, both metals are likely to rise substantially over time, potentially continuing their upward trajectory for years as the broader financial system faces increasing strain. If you're ready for unfiltered truth and sharp market analysis, hit that subscribe button. Let's explore the latest insights from Egon von Greyerz' recent interview.
The trends are so clear, and these are long-term trends. We should not be in any way concerned about whatever happens short-term, because the scene is set, and this scene is very clear. We are having the moves that are required to reach the end of this monetary era. Whether that takes another 10 years or whatever, it doesn't matter. The easiest way, obviously, to read it is always in gold terms, but gold doesn't go straight up. I was working when the gold window was closed by Nixon in 71, and remember that well, $35. But we entered, as I just said, the gold market in early 2000s at $300. And nothing is changing. The price changes, of course. It can't go straight up. Sadly, gold buyers or precious metals buyers love to buy high when something's happening to the price. And they also, some of them, sadly, also love to sell when it goes down. Well, they don't love to, but then they get scared straight away. Luckily, we have primarily wealth preservation investors who don't worry about these short swings. But coming back to what's happening in the world, if, to me, the end goal is set, and then we'll have to have a number of events that makes that happen. That is my very strong view, and it's like Neil Howe's fourth turning. It's not, I don't follow that in particular, but that's another very good way of explaining it. We are at the end of an era, and then, at the end of that era, debt will grow exponentially, inflation will go very high, interest rates will be very high. There will be geopolitical events that trigger it also, but they're not the reason for it. They are just events or catalysts because the trend would have happened anyway. And of course, then we have, the banking system is going to fail. Hopefully not totally, but it's not impossible. The U.S. Treasury issued a report recently that shows that liabilities of about 48 trillion dollars. This is the U.S. balance sheet, and assets $6 trillion. And if you add unfunded liabilities, you get up to $100 trillion. So against $6 trillion assets. That is the balance sheet for anyone who's ever looked at balance sheets. That is the balance sheet of a bankrupt country. Or if it was a company, it would be a bankrupt company, and it would fail. No one would ever accept any debt issued by that company, or in this case, this sovereign nation being the USA. And therefore, I cannot for the life of me ever understand how anyone can buy US treasuries, especially long-dated ones, of course, because they are totally worthless. And that's what this balance sheet shows. And that trend is going to accelerate in the coming years. And you know, if you look at debt has gone up 43 times since 1980, and tax revenue has gone up 5 times. How do you think ever that debt is going to be repaid? No, never. It will be just more treasuries issued that would be totally worthless. We invested in gold, as I said, heavily in 2002 at $300. We obviously never sold anything ourselves, and most of our clients have been with us the whole time. And of course, a lot of new clients are coming in. The selling is very marginal because we have the wealth preservation clients, the clients who hold gold for the right reason. And you know, as long as you are not leveraging, which you should never do, you should hold physical gold, store it in you know the right place, and never sell it. If you need some for liquidity, of course, yes, you do sell some. But nevertheless, overall, just hold it and never worry about the price, because the price is going to do what we know is going to happen at the end of a monetary era. And of course, there will be corrections, but people shouldn't be scared. You know, it's so, you know, for thousands of years, currencies have gone to zero. And this one is now, the present monetary system is going to zero this time also. And therefore, don't worry about the short term. Stick with your gold, stick with your silver, hold it in physical form, and don't look at the price every day. It's going to be a lot higher within the next few years, or even sooner, but it's going to probably go up for another 10 years, I would say. And that's an arbitrary date, but although I actually have a long-term cyclical top in 10 years' time. Whether that will be right or not, we will see. I will be quite old in 10 years' time, but I'll be there still. I have to follow it and see what happens.
Regarding the long-term outlook, Egon von Greyerz says fiat currencies are inevitably heading toward collapse, with rising debt and inflation signaling the final phase of the current monetary system. He explains that silver's volatility is normal, and despite sharp corrections, it is likely to outperform gold over time. Egon advises holding mostly gold for stability, while keeping some silver for higher upside, viewing dips as opportunities for long-term investors. Ongoing money printing will drive higher debt, inflation, and interest rates, ultimately leading to the collapse of major asset classes like stocks, bonds, and real estate in real terms. He predicts that central banks may no longer be able to stabilize the system, raising the risk of sovereign defaults and a broader financial breakdown, followed by a forced monetary reset. Gold and silver are not held for price gains, but for preserving purchasing power, noting that unlike fiat currencies, they retain long-term value and can protect wealth through periods of extreme economic disruption. Let's jump into the interview.
My view about the world and about the world economy and gold and silver prices are a consequence of the world economy. And therefore, that view is never going to change, whatever happens, because nothing, in my view, can happen now that changes the long-term direction of fiat money. It always goes to zero, without fail. In every single monetary system throughout history, it's gone to zero. So now it's in this system now since 1913, when the Fed was founded, most currencies are down 99%. So we have that final 1% to go. But that final 1%, remember, is 100% from here. And that's going to happen. And that fall of 100% we are going to experience. And that obviously leads to massive debt growth, massive inflation, high interest rates, and a lot of problems around the world, in the world also. So nothing can change my very firm view and that we are going to see the end of this monetary system within, say, roughly 10 years. Silver is absolutely behaving as it should and as it does. And that's why, from the beginning, we told our investors, if you want to, this is 25 years ago, if you want to sleep well at night, just hold gold. If you want a fantastic roller coaster journey, which is still up, but with massive swings, hold some silver. But silver is not for widows and orphans. And most of the time, we told clients who want to just feel safe, hold just gold. Now, with the silver price now, even with the correction we've had, or with the big move we've had before the correction, this silver is going to go up substantially faster than gold in the next few years. So definitely, it is a very good investment opportunity. And therefore, it would be right to hold silver, let's say, to the extent of 20 to 30% of your total gold and silver assets. Not more, I would say, if you're not a speculator. But we don't deal with speculators. We deal with long-term holders. And therefore, yes, hold some silver and just don't look at the price, because the price rises are fantastic. Everybody loves it. But nobody, or very few people, can actually live with the massive corrections we see in silver. And we've seen it this time again. It's very normal. It just gives us a very, very good opportunity. If you're not fully invested, you should buy when silver and gold correct. You should not buy when they go up to new highs. But even if you buy at new highs, you are going to make money in the next 10 years. I'm quite convinced. But nevertheless, this is an opportunity for the ones who are not fully invested in gold and silver to buy more. But remember, buy physical, don't leverage it, and buy it and hold it for I say 10 years, I would say, up to 10 years. Obviously, the money printing will continue, so government debts will increase, interest rates will go up, so there'll be massive money printing. There will be in real terms, all bubble assets will collapse. In that, I include stock market, obviously, the bond market, property market also. That's in real terms. Of course, if we get higher inflation, they might be higher in nominal terms, but that's irrelevant. What happens at the very end? Will there be a total collapse of the financial system? I don't actually think that this time, like in 2008, that the central banks can save the system, because it's now totally global. It's of a magnitude that can't be saved. So I would suggest that the system will, or major parts of the system will collapse. There will be sovereign defaults. They might not call it default, but nevertheless, it will be technical defaults. And consequently, it'll be a horrible time for the world. Now, at the end of it, you will have, of course, an implosion of debt. Debt will become worthless, and nothing will be repaid. And then at some point, whether that's in 10 years, there will be a reset, but that's a forced reset. I wouldn't call it a structured reset, but out of that will be a phoenix type of new currencies coming. But remember that when debt collapses, all the assets that this debt was backing, all those assets will also collapse. So, and of course, gold and silver will reflect this. Now, in real terms, gold and silver probably will go up a bit, even at the end of this era. But that's not why you hold it. You hold it because that in purchasing power terms, you could still use your gold directly or indirectly to pay for things that in gold terms have not increased and never has in history. I've jokingly been saying that in speeches and interviews I've done, that it's totally wrong to measure your assets in dollars or in euros or yen, in fiat currencies, because you're measuring your assets in something that is going down by the day. So I've said you should measure it in cows or chickens. Now, I did then started looking into that thoroughly, and I found that in cows, prices have not moved really for 5,000 years. The price of a cow in gold terms has been between a half an ounce and 1 ounce of gold for a cow. So that is quite amazing. So what started as not a joke, but as just a more fair comparison how you should measure your wealth. You actually couldn't measure it in cows. Now we found a better way, which is gold, of course. But that's the only way to measure it. Don't measure it in dollars. Don't measure it in euros. They're worthless. You're just fooling yourself. You just make it look a lot better than it is, the situation. So in real terms, you will maintain your purchasing power, and that's all you need in order to survive financially the coming crisis. There'll be a lot of other problems in the world, but at least if your financial position is safeguarded, that is a very important part of surviving the crisis which is coming.
As investors get bearish on gold, industry watchers broadly maintain a constructive long-term view, arguing that structural drivers such as geopolitical risks, fiscal concerns, and ongoing central bank demand continue to underpin its longer-term bull case. Traditional assets may struggle in real terms, while precious metals continue to serve as a safeguard of purchasing power rather than mere speculative trades. As the global financial system faces increasing strain, are investors prepared to look beyond short-term price swings and position themselves for a potential long-term reset in the monetary system? Let us know what you think in the comments. If this video brought you any knowledge, give it a like, subscribe, and ring that bell so you're always in the loop. See you in the next video.